It took me over 5 years to learn what I'm going to teach you in just 5 minutes. Here's the truth. Understanding crypto trading is not just for crypto traders. It's made me such a better crypto investor, having a better understanding of technical analysis, because it enables me to get better risk reward on my entries, manage risk better, and have a tangible framework for me to validate profit taking, entering positions, and invalidating positions with a stop loss. So in this video, I'm going to give you the basics of all you need to know about technical analysis. This is the system that I and my traders personally use on the investing side. And if you want to spend more time, you can also use this for low time frame trading. These are the essential things, no matter what you're doing, scalping, swing trading, long-term investing, that are going to make a huge difference in your portfolio. So it might be the most important 5 minutes of crypto YouTube that you ever watch. So firstly, what is the goal of trading? Well, the goal of trading is to find opportunities which are outsized, aka asymmetric. You're looking for trades in the market, whether it's a long-term trade, so an investment, or a short-term scalp trade, where the reward is bigger than the risk. So the upside is bigger than the downside. If you consistently take bets which are positive expected value, aka the expected return on that trade is more than the capital that you're outlaying, then over time, you will consistently make money in the market. And technical analysis gives you a tangible way to substantiate that your trade is positive EV. So ultimately, the first question you have to ask yourself is, what are you going to be using trading for? Are you an investor who wants to use it for better entries and better exits? Are you a scalp trader? Are you a swing trader? You might not be able to answer that today, and that's okay, but it's all based on your temperament, the amount of time you have, and your skill set. Some people are more suited to being low time frame traders. Some people are better high time frame traders. It depends on your personal situation. For me personally, I seem to do the best when it's multi-week or multi-month trading. I'll still use TA for this, but I'm not as adept when I'm trading super short term and getting in and out of positions. Some people really like that and they thrive on that. I personally don't, because I have other things that I like to focus on. So if you have a job, you might be looking at the slightly higher time frames when you chart. If you have more time in crypto, you might be looking at the lower time frames. It completely depends on you. All right, let's talk about the absolute foundation of trading. And to be honest, if you want to just simplify your system down to this, support and resistance. This is the foundation of technical analysis. Support is where buyers step in, and resistance is where sellers step in. If you're trading, you typically want to buy near support and you want to look to take profits near resistance. The reason you want to do this is because if you buy near support, you have an easy level to invalidate your entry. And if you sell at resistance, you have an easy level to take profits on that entry or potentially validate a new entry if it breaks and closes above. So learning how to draw support and resistance is so important. You want to look for levels where there is a clear point of interest on the chart. This is typically exemplified if you draw a line at a level where there's multiple reactions on your given time frame. You'll chart on a higher time frame for longer term entries, and you'll chart on a lower time frame for short term entries. Remember that generally, the higher the time frame you chart on, the bigger and the more validated the move, but the less trades you're going to be able to take. So that goes back to what kind of trader you are. Pro tip, you can actually use AI to help you learn support and resistance. If you send it a screenshot of your chart, you can draw in your line, send it to ChatGPT, and ask if you're doing the right job. It's super important to recognize where support and resistance is, because this is the building block of your trading strategy. The second thing that's very important in trading is momentum. You want to be in the right trend. So if there's an uptrend, aka the chart is making higher lows and higher highs, you generally want to be longing more than you're shorting. If price is in a downtrend, so lower highs and lower lows, you generally want to be selling or shorting more than you're longing. Never fight the trend in crypto unless you are a swing reversal trader. In that case, you will only be doing so after noting the reaction at a major support or resistance zone that we just went through. Any intra-range trades will all be taken based on the current trend. You can use momentum indicators like the 100-day, 200-day moving average to validate momentum, and momentum indicators can also act to validate or invalidate trades. That leads me on to point number 3. Every single trade that you take should have a stop loss or an invalidation level. Whether you are a low time frame trader or you're a high time frame investor, having an invalidation for your trade is so important. And this is where I see so many investors mess up. They'll hold onto a bag and they'll end up round tripping most of their gains because they don't have an invalidation. The better your entry, the more precise your entry, the more precise your invalidation, which means you risk less downside on the trade. Remember what I said before, trading is all about asymmetry. So the opportunity has to be outsized versus the downside, and having an invalidation helps you protect your downside. By the way, if you're enjoying this content, before I get into the final 2 points, make sure to subscribe to the channel. This is a brand new channel where I'm going to be helping you get the edge on crypto with everything that I've learned since I got into the space in 2019 after millions of dollars in wins and millions of dollars in losses. This is purely short, evergreen content to help you level up your trading and investing. Now onto the final 2 points. You have to work out whether you're leverage trading or spot trading. Spot trading is a lot safer. So what I would recommend is that when you get into trading or investing, you stick to spot. The same logic applies, the same principles work, but you lower the risk because you're not paying funding rates to keep a trade open, like if you're in a leverage trade. And you also have less risk because the leverage trade increases the volatility of your trade, which potentially opens up more downside if price goes down. Now you can make more money if there's upside, but the only case that you should be using leverage is for capital efficiency. So only if there's a better opportunity elsewhere where you're deploying capital, and then you use leverage to get the same amount of exposure to the same idea that you have. But honestly, for most people, when I analyze most people's spot versus leverage trading in my Discord community, for example, would be better off using spot because rarely in the beginner to intermediate levels does capital efficiency become a major concern. As your portfolio gets bigger and you start implementing more advanced strategies like hedging and staking, then it becomes much more of a concern. And that's where it's come into my portfolio personally. But to learn, use spot. And if you want to use leverage later, you can implement it later. And then the final building block of trading, and this is so important to make sure that you have liquidity for new opportunities, is taking profits. Remember, as price heads into resistance, take some profits incrementally. Incremental profit taking is what I recommend on every position. So don't have a determined level unless you're swing trading where you're going to take all your profits, slowly ladder out on green days when price is going up, and use fear in the market. As long as you're in an uptrend, if you get a red day, use those days to buy into the market. So look at the overall trend. If you are in an uptrend, try and maintain exposure to that trend, but take profits into green candles. And if the market gives you opportunities to buy in on massive red days, you can use that to get better risk reward entries. Most of my buys in the market, unless it's a breakout trade, are on red days. Always buy the fear and sell the greed, but you have to make sure you cycle profits into those green days so you have enough money to buy in when the red days hit. So that is my very short summary on trading. They're all the key principles that you need to know. If you enjoy videos like this, make sure to subscribe to the channel. Share this video with a friend if it's going to help them out. If you can master these core principles, that's honestly the foundation of trading. And then you can obviously build on top of it with more experimentation, more advanced tactics, more advanced indicators. But before getting into order flow and VWAP and RSI and momentum oscillators, just now support, resistance, invalidation, momentum, profit taking, and you'll probably end up winning in the trading game because most people don't have a clue about this stuff, and now you do. See you in the next one, guys. Peace out.